All analysis in this show is personal analysis only, not investing advice. Please consult a qualified financial expert before making your investment decision. Good morning and welcome to a critical start to the trading week. From Market Meridian Finance, I'm Eric. Before we start, a clear reminder, all analysis in this show is personal analysis only, not investing advice. Please consult a qualified financial expert before making your investment decision. We open this Monday with a massive risk-off rotation across global markets. Over the weekend, geopolitical tensions in the Middle East escalated sharply, triggering a fierce flight to safety. Asian stocks are under pressure, while safe havens are surging across the board. This is not just volatility. This is a full-scale shift toward capital protection. Let's bring up the key early numbers. Gold, XAU USD $5,357.52 plus 1.49%. WTI crude, $73.21 plus 8.90%. Brent crude, $79.39 plus 8.94%. US dollar index, DXY 97.62 plus 0.41%. VIX volatility index, 22.15 plus 18.89%. US dollar to Japanese yen, 156.80. These numbers tell the story, fear is back. The complacency that defined early 2026 is gone. What's extraordinary is the twin rally in the US dollar and gold. Normally they move inversely. Today they are rising together. That is pure, unfiltered fear. Investors are buying every safe asset they can find. The VIX above 22 confirms it, volatility has returned. Every headline from the Middle East will move markets today. Again, a reminder, all analysis is personal analysis only, not investing advice. Please ask a financial expert before making your investment decision. Asia-Pacific traders may face a lot of confusion by watching the screens. Let's look at Asia first. The session has been highly negative outside of energy stocks. Australia's ASX 200 is struggling, held up only by energy names. Financials and real estate are under heavy pressure. The real drama is in Japan. The Nikkei 225 opened sharply lower, hit by a double shock, surging oil prices and a collapsing yen. US dollar to Japanese yen is at 156.80, deep in intervention territory. In normal risk-off events, the yen strengthens. Not today. The yield gap with the US is simply too wide. Markets are now on high alert for BOJ intervention. If we do not hear strong pushback soon, 157.50 is the next target. In China and Hong Kong, the Hang Seng faces a weak open. Higher commodity costs are threatening the recent stimulus-driven recovery. Higher input costs squeeze margins and slow factory activity. Asia is sending a warning, this geopolitical shock is global, not regional. Once again, this is personal analysis only, not investing advice. Please speak to a professional before you invest. Now, talking about commodities strategies today. Today's entire market is being driven by commodities. Let's start with gold. At $5,357.52, gold is no longer just a hedge. It is the world's favorite safe haven asset. Demand is pouring in from institutional and retail investors alike. If tensions remain high, a move toward $5,400 is very possible. Next, crude oil. WTI is up 8.9% at $73.21. Brent is at $79.39, having peaked at $82.37. This is not about demand. This is a geopolitical risk premium, pricing in potential supply disruptions in the Strait of Hormuz. This is a classic supply shock the global economy was not ready for. Silver is higher but lagging gold, because silver has large industrial exposure. This tells us today is a fear trade, not an inflation trade. Investors are worried about global growth. Come to today's Forex strategist. The US dollar is the clear winner today. DXY is at 97.62. In times of crisis, the dollar remains the world's reserve currency and the ultimate shelter. The euro and British pound are under pressure. Europe is the most vulnerable major economy to an oil shock. Higher energy costs, slower growth, and a less hawkish ECB weigh on European assets. As Europe opens, expect more rotation out of European equities and into US Treasuries and the dollar. We also watch US ISM manufacturing PMI later today. A strong reading would support the Fed's higher for longer rate stance, pushing the dollar even higher. Let's wrap up with today's key takeaways. And a final reminder, all analysis on this show is personal analysis only, not investing advice. Please consult a qualified financial expert before making your investment decision. First, volatility is back. The VIX above 22 means caution is critical. Second, energy is acting as a portfolio hedge against equity losses. Third, watch US 10-year yields. Rising yields will pressure growth and tech stocks. Every headline from the Middle East will move markets today. Stay informed, stay careful. From Market Meridian, Imeric, thank you for watching and have a safe trading day.